Hi, so in this video I want to discuss about how do you analyze volume and how you can use volume for more effective trading. Whether you do day trading or whether you're an investor, swing trader, whatever you are, you really need to analyze volume. And this is the area where most of the traders are falling apart. They are using indicators, they are using different sort of strategies, but what they miss out is that they don't analyze volume and often they go into a wrong trade, hit their stop loss. So, see, one thing that we should know, essentially technical analysis is the analyzing price action, your open interest and your volume for forecasting the future price movements. So volume is a very important factor, the most important tool when it comes to trading. So in this video, I'll be talking about, the volume is high, volume is low. So how do I identify whether the volume is high or low? So I put a 20 period moving average on my volume, and this is already pre-built for your investing.com people who use that website. If you use trading.com, tradingview.com, I'll suggest that you switch over to investing.com for analyzing volume better. So I put a 20 period moving average on my volume, and if my volume is above the 20 period average, I consider it as high volume, and if the volume is below the 20 period average, I consider it as low volume. Number one. Number two, Dow theory is very important for technical analysts. And even in Dow theory, principle number five, it is mentioned that the volume must conform with the price. So volume is really important. So let's get into it on how to, trade with volume in your benefit, in your direction to get a better trade. So I'm looking at the charts of Nifty Bank, 15-minute charts. So as we can see here, this is a very good level of support. This is a very good level of resistance. So I'm moving in this zone, in this consolidated area. And during this area, you can confirm that volume is very less. It's missing. So I don't trade in such periods when there's no volume. I avoid any such trades because I can't take the benefit of volatility and the momentum. And as you know it, this is like a double bottom formation, right? And if you don't know double bottom, you can also guess it's a resistance breakout. So how do I know it's a good breakout and not a false break? So that's where the volume comes into play. Whenever a breakout happens, this should be confirmed with heavy volume. And that is what is happening here. The volume is also increasing with the increase in the price movements. So this means that the breakout, the uptrend is very strong because it is confirmed by increase in volume. So most of the traders, they exit their position at this point. And for example, you saw a doji and you exit positions, but that is not the case. That is also an area where we need to analyze volume. So in this area, when the price corrected after the breakout, we actually saw a fall in the volume. So what is this indicating? This is basically indicating that the price fall is not of the selling is not of very high volume. So it will not sustain for a long time. And that is why prices again started increasing. And again, this increase in the price was followed by a very high volume. Also, if you talk about today's breakout, this was a very important support for Nifty Bank around the 18,000 levels. And when this break happened, what we have to check it is whether it is confirmed by high volume, and it was confirmed by very high volume. And this is a very important point, and you can take this trade and you can walk this wave of downtrend. So I want to analyze a couple of examples at some different scenarios so that you can trade, beneficially. So let's have a look at ITC. So in this chart, it's a 1 hour chart. So what happened in ITC? There was a consolidation in this period. Prices were consolidating in 176 and the 172 range for quite some time, a lot of hours. And during the consolidation, my volume will start fading away. And what are we concerned with? Day traders, whatever kind of trader you want to break out, you want to ride that wave, get the profit. So this is the point of breakout that you're concerned with. So what you need to check it is whether it is of a good volume. And what we can see is that prices start when the prices were increasing, the volume also started increasing a lot. And this basically is showing that the volume confirms the price action. The increase in price is confirmed by high volume buying. That's what we want. What we don't want is price increasing and volume falling. That would be not sustainable at all. This price action is sustainable because it is followed by heavy volume. Let's have a look at another example on the charts of BPCL. So this is the charts of BPCL, again the 15-minute charts. This is a good movement. When the price broke this the support range, this one, and we can confirm it's a very good high volume breakout. So you can trade this breakout, the breakdown essentially, because it's confirmed by high volume. So it will not be your false break, or not a false breakout. All right, talking about what happened later around the 20th. So prices increased. It was followed by a huge increasing volume. When the prices started falling and correcting, it was followed by low volume, decreasing volume. That means the price fall will not be sustainable. My momentum of buying is still intact, and that is why when the prices started increasing, my volume started increasing. So I hope you are understanding the difference between these two areas. Another example would be this one when we saw this actually is a flag pattern. So if you know how to trade that, you could have made a good amount of money here. Another example would be over here. So when the prices were increasing, it was followed by increase in the volume. But when the prices started to consolidate or fall, it was followed by low volume, meaning the selling pressure is not going to sustain. So you should not go in this direction and stay invested in this trend. And we again saw a big breakout followed by increase in volume, and this was a very good time to trade. And during this consolidation, again, there was no volume at all. So I will be staying out of the markets during periods when there is no volume. And finally, this was BPCL charts of 15 minutes. I want to look at BPCL charts of 5 minutes. Another example would be at this point. I have actually zoomed in so that you can see the exact price movements. High and tight flag on the 20th. When the prices increase, it is followed by increase in volume. So it's a good trend. Ride that wave, get that profit, go move in that direction. When the price falls, should you go in that direction? Let's have a look. You should not, because in decrease in price is followed by fall in the volume. You should go in this direction only when the fall in price is also accompanied by volume, high volume selling. That will mean that the selling pressure is a lot. You can ride that wave. Another example is over here. This is actually a pennant, or you can call it a symmetrical triangle. You can see when the prices increase in volume. When the prices fall, when it consolidates in the flag, in the pennant, there is a decrease in volume, meaning it's just a consolidation. It's not a new trend. Your trend is still intact, which is bullish. And when the flag pattern breaks out, we saw increase in volume, so we can ride that trend. I hope all these, how to analyze volume is clear. So I essentially do analyze my volume during the breakouts. I make sure it's followed by a high volume. And, when I get these patterns like double top, double bottom, head and shoulders, etc., I want to make sure that when I'm moving in the direction, it is of high volume. If it's not of high volume, I try to stay out of it because it can be a false break. And also you can use the volume to identify whether the trend is getting over. So for example, if your trend is strong, if it is an uptrend, there should be an increase in volume also. But if the trend is going up and there is a decrease in volume, it is just a divergence. So it means that somewhere around here the trend is going to stop and it is going to turn negative. So try to use these concepts when you're trading or investing, and let me know if you have any problems, and I'll be very happy to help you. All right, have a good night.